10,000 shares were issued of rupees 10 at a premium of rupees 2, and the money was payable in 3 installments of 3 plus 5 plus 4, and the premium of rupees 2 was included in the allotment. Company received applications for 25,000 shares and no share was rejected. And one shareholder holding 500 shares couldn't pay allotment money and first call money, and his shares were forfeited. So have a look at the question carefully. You will find that there is oversubscription and there is no rejection. It means the company must have applied pro rata, and pro rata was 25,000 is to 10,000, means 5 is to 2. Whenever there is oversubscription, I strongly recommend you should develop that table, which I have already explained you at the time of issue of shares. So let's assume there are 2 shareholders only, A and B. A is holding 500 shares at this time, and this shareholder must belong to the pro rata, because in the whole subscription nobody could get 100% allotment. Everyone was allotted the shares on pro rata basis of 5 is to 2. It means whosoever holding 200 shares now must have applied for 5 shares. If this person 500 shares holder has 500 shares now, he must have applied for 5 upon 2 into 1500. It means he must have applied 1250 shares, but due to pro rata he was allotted only 500 shares. So let's go to the table. There were 2 shareholders, A and B. A shares applied 1250, shares allotted 500, pro rata applied 5 is to 2, money received. Because he applied for 1250 shares, he must have sent the check of 1250 into 3, 3750. And you know, whenever there is pro rata, there must be advance money or calls in advance with the company. Because he was allotted only 500 shares, so company cannot keep more than 1500 on application, means 500 into 3. After 3750, 1500 was kept for application, but still the company had got 2250. It will be adjusted in the allotment as calls in advance, and nothing for first call and nothing was returned. And then B applied for 23,750, because total applications received were or applied were 25,000. If A applied for 1,250 shares, then the other share must have applied for 23,750, and he must have been allotted only 9,500 shares. So how much money was received from this shareholder? 23,750 into 3, that is 71,250. And how much money was adjusted in application? That was 9,500 into 3, 28,500. And how much money advance was adjusted for allotment? 42,750. Nothing for first call and nothing for money return. In this way, shares applied 25,000, shares allotted 10,000 shares, money received 75,000 rupees, money adjusted in application 30,000 rupees, money adjusted in allotment 45,000 rupees. So let's start the journal entries. Bank account debit to share application account debit to share capital account. So how much money was received on application? 25,000 into 3, 75,000 rupees. And share application account must be debited by 75,000 rupees. You know, share application account must be credited under any circumstances. So it was credited by 75,000. Now it has been debited by 75,000 rupees. To share capital. So how much money can be credited as capital because application was for rupees 3. So the capital will be credited on 10,000 shares. 10,000 into 3, 30,000 rupees. Then the excess of 45,000 was taken to the allotment as an advance money. So we could write down to calls in advance, but here I am going to write down to share allotment 45,000. So I am not using the account calls in advance for the convenience of my explanation. Otherwise both options are okay. Now transfer entry for allotment. Share allotment account debit to share capital account to share premium account. Share allotment will be debited 10,000 into 5, 50,000 to capital, 10,000 into 3, 30,000 to share premium, 10,000 into 2, 20,000 rupees. Then bank account debit to share allotment account. You know, one shareholder holding 500 shares couldn't pay allotment money. There is a situation of calls in arrear. So, you know, at the time of allotment, the money due was 50,000 rupees minus 45,000 rupees because 45,000 rupees have already been received for advance money in the allotment. If you look at the table, 45,000 was advance money. So we cannot get 45,000 rupees at the time of allotment. In real terms, the money due was only 5,000 rupees. It means the company was waiting for 5,000 rupees. But the company couldn't get one check from that defaulting shareholder. Actually, he was supposed to pay 250. How? Because he was holding 500 shares. 500 into 5, 25 was due, but he has already paid 2250 advance for the allotment. So he was supposed to pay 250 at the time of allotment but couldn't pay. So it means the real arrear was only 250. So 5,000 minus 250, 4,750. Then first call account debit to share capital account and bank account debit to share first and final call account. So first call to share capital will be 10,000 into 4, 40,000 rupees, and then bank account debit to first call because that shareholder couldn't pay the check at the time of first call and he was supposed to pay 500 into 4, 2,000 rupees. It means we could receive only 38,000 rupees. 40,000 minus 2,000 means bank account debit to share first and final call account debit 38,000 rupees. So be careful, whenever there is forfeiture, you have to take care of 2 or 3 things. Number 1, whether this issue belongs to premium or not. If it's a premium share, the premium was paid or unpaid by the shareholder, means the defaulter. And number 2, share forfeited account never includes the money paid on premium. And secondly, you must be careful whether this shareholder belongs to pro rata or not. If it is on pro rata, you must develop the table for the convenience of question.